What's up, everybody? Redfin CEO Glen Kelman believes investor activity, his own company's iBuyer program included, has contributed a lot more to the rapid decline in home prices that people are aware of. So today, we're going to dig a little deeper into that. Also, Bankrate has come out with a 5-year forecast that includes mortgage rates, home prices, and the housing market as a whole. That includes opinions from Lawrence Yun, the chief economist from the National Association of Realtors, as well as some others, so we'll go through that as well. And as always, I will chime in with my opinion. So let's just dive right in. Lance Lambert wrote an article in Fortune titled, "Home Prices Are Falling Faster Now Than in 2006. Redfin's CEO just explained why," where he quotes Kelman as saying that investors and iBuyers specifically are responsible for correcting home prices faster now than back in 2006. He explains it like this. Historically speaking, home prices are sticky. Sellers simply don't want to relent on home prices unless economics, like a supply gut, force their hand. That's not as much the case for institutional investors and builders. If they think prices are about to drop, they want to get out first. The fact that the pandemic housing boom saw investors become a higher share of buyers, Kelman says, ultimately makes the U.S. housing market more vulnerable to a faster swing down. When the shiitake mushrooms hit the fan, you, meaning investors, want to get out first. The way to do that is to figure out where the lowest sale is and be 2% below that. And if it doesn't sell in the first weekend, move it down again, Kelman says. So he's basically admitting that he's telling the Redfin iBuyers to drop their price immediately below the lowest comp on the market. And if this is true, you can bet that home prices will go down a lot faster than the last downturn. He's trying to get ahead of the game by selling off his inventory as quick as possible to offset any losses. And let's be clear, they own a lot of homes. Here's something else that Kelman said. My take is because builders and iBuyers account for more inventory, that leads to a faster correction. We're one of them, we're an iBuyer. We notice immediately when fewer people are on our website and fewer people sign up for tours. We're sitting on $350 million worth of homes for sale that we bought with our own money, or worse, bought with borrowed money. And what we always told investors is that we would protect our balance sheet by acting quickly. We don't have hope as a strategy. We immediately started marking down things. And if they mark prices down, the rest of the neighborhood will have to do so as well in order to compete. This has good and bad consequences. It's good if it creates more inventory and makes housing more affordable for those buyers that got priced out of the market in the last 2 years. It's bad because these new comps will bring down the value of your house if you're a homeowner. And if you're a seller, well, you're gonna have to adjust your listing price to compete, so you're not gonna be happy. Right now, inventory is still pretty tight in most areas. So even though the market is correcting, prices haven't gone down in a lot of very sought after places. Where I am, for example, in the DC area, prices aren't escalating like crazy like they were before, but values haven't come down that much either, especially if a house looks really good and is priced correctly. But if investors start offloading their inventory that they've collected over the past 2 years at a discounted rate, this could definitely change. And the iBuyers themselves won't lose as much as you think if they sell at a discounted rate, because they charge the sellers a service fee in exchange for a speedy transaction, which will buffer any possible losses. This is just one of many issues that can arise from a large investor manipulating the housing market. They simply have too much power and control, and the rest of us have to suffer the consequences. As soon as demand weakened, we were marking properties down, and that drives prices down. Every other home for sale in a neighborhood where we mark the listing down now has a comparable sale that every buyer is going to know about and talk about, Kelman says. It's like he's proud of it. What do you guys think? We all know what happened to Zillow and their iBuyer program. It failed. They got out as soon as they realized they were stretched too thin. It just sounds like Redfin's trying to recoup their losses by offloading their properties as quickly as possible. Comment below and give us your thoughts on what do you guys think of Redfin Redfin and Kelman statements. Let's pivot to Bankrate's article titled Housing Market Predictions, the Forecast for the Next 5 Years, and just quickly see what they're saying. First, let's talk mortgage rates. Lawrence Yun, the chief economist for the National Association of Realtors, thinks that 7% will be the level for the rest of this year and most of next year. And within 2 years, the rate should return to 5.5% to 6%. Danushka Nanayakura-Skillington, the assistant vice president forecasting and analysis for the National Association of Home Builders, agrees, predicting rates will drop to around 6% by the middle of 2024. If this is true, this is really good news and a really good reason to buy now, where you can negotiate a good deal and you have much less competition, especially compared to the way it was in the last 2 years and the way it's most likely going to be again if rates go down. And then you can simply just refinance in a year or two to a lower rate. You may even want to entertain using an ARM, an adjustable rate mortgage, now because you can get a lower interest rate most likely, and then refinance in a few years to a 30-year fixed. But please talk to your lender, as everybody's situation is different and they can best advise you. As far as home prices, Yun foresees zero or minor changes in purchase price tags on a nationwide basis next year, with increases or decreases of around 5%. The only exception that he sees is California, where he says they could see about 10% declines. Overall, in 5 years, he expects prices to have appreciated a total of 15 to 25%. Greg McBride, Bankrate's chief financial analyst, predicts that home prices will average low to mid single-digit annual appreciation over the next 5 years. This rate of appreciation, he says, is consistent with a long-term average of home prices, increasing by a rate that hovers a percentage point above the inflation rate. As far as the housing market as a whole, Yun predicts that sales will be at a low point next year, with only 5.3 million units sold. He foresees a gradual increase afterwards, up to an annual 6 million units by 2027. He believes that the housing shortage will continue this year, with the supply balancing out in about 5 years. He also says that he believes that the market will continue to be a seller's market while inventory remains low. By 5 years, though, he does think we will have a more balanced market where neither buyer nor seller holds sway. Instead, the negotiating power will be more equal and just depend on the individual transaction. And Yun isn't the only one that believes that home prices may still appreciate next year. Corelogic just came out with their U.S. home price insights for November of 2022. In it, they forecast that home prices on a year-over-year basis will increase by 3.9% from September of 2022 to September of 2023. They think that the top markets at risk for a home price decline are Crestview, Fort, Walton Beach, Destin, Florida, with a very high risk probability, 70% or more, followed by Bremerton, Silverdale, Washington, Bellingham, Washington, Eugene, Oregon, and Tacoma, Lakewood, Washington. Do any of you guys live in any of these places? If you do, please chime in and comment below and tell us if you agree with them. I hope you guys got some value out of today's video. The bottom line is, if Redfin starts unloading their properties at a discounted rate and Yun and the others are right about the future of mortgage rates and home prices, then today, right now, it's a great time to buy when there's a lot less competition. You could possibly negotiate a great deal and then, like we said earlier, refinance to a lower rate later, and hopefully home price values will still continue to go up in the next 5 years. Let me know what's happening in your neck of the woods. Are prices going down? Do you see any Redfin properties for sale? Or are you still seeing multiple offers like I am? The best way that we all can really understand what's happening in the housing market is by everybody chiming in and commenting on what's really happening where you live. If you do want to show our channel some support, definitely smash that like button, comment below, and subscribe to our channel. It does help us with the YouTube algorithm and motivates us to make more videos. Thanks for watching. I do appreciate it. Bye!